Welcome to Talk Tickers, your shortcut for getting up to speed on really crucial earnings calls.
That's right.
Today we are diving into the latest from biopharma heavyweight ABBV. This is for their first quarter 2025 results.
Yeah, it looks like a pretty strong start to the year for them.
Yeah, it does. So let's get right into what you need to know.
Absolutely. So ABV's Q1, well, it exceeded expectations on a few key fronts.
Okay.
Adjusted earnings per share came in higher than forecast. And maybe more importantly, their non-Humira sales really showed some significant upward momentum.
Non-Humira being key there.
Exactly. And this growth, it was mainly fueled by, their Immunology and Neuroscience divisions.
Right.
And because of this strong performance, ABV has actually raised its financial outlook for the whole year.
Okay, so a solid quarter, raised guidance. Let's dig into what management said. The CEO apparently described it as excellent.
Yeah. That was the term.
Saying they beat their own goals across the board, immunology, neuroscience, oncology, even aesthetics, which had some issues, right?
Yeah, we'll get into that. And that adjusted EPS you mentioned, it landed at $2.46. That beat their previous forecast by 10 cents.
10 cents. And you said that was largely powered by the newer drugs.
Definitely. Those non-Humira sales, they jumped 21%. And the real stars here, you've got Skyrizi and Rinvoq.
The big two.
Together, their sales were up 65%. So this suggests they're not just selling more, they're really gaining ground in competitive areas like inflammatory bowel disease.
That kind of market share gain is pretty significant.
It really is. It can signal a shift in, how these conditions get treated.
And it sounds like they're not just resting on that, they're looking ahead. Pipeline development, strategic moves.
Precisely, yeah.
Yeah.
Key pipeline stuff includes progress with lutikizumab in immunology, and also their work on these next-generation antibody-drug conjugates in oncology.
ADCs, right. Those are kind of like targeted therapies.
Exactly. Think of almost like guided missiles for cancer cells. They combine the targeting of an antibody with a potent drug payload. It's a really hot area. And beyond their own pipeline, ABV is also making moves. Strategic investments, particularly in obesity and immunology. They've done deals, acquisitions like Nimble Therapeutics, a partnership with Gura.
So really looking to branch out, find that next wave of growth.
Yeah, it suggests they're focused on diversifying, for sustained long-term growth.
Yeah. Not
just relying on Skyrizi and Rinvoq forever.
Okay, so with all this positive momentum, the updated financial outlook makes sense then?
It does. They bumped up the full year 2025 adjusted EPS guidance by that same 10 cents. So the new range is $12.19 to $12.29.
Okay.
And their total net revenue forecast also up by about $700 million, now expecting $59.7 billion for the year.
Wow. And the drivers there are still Skyrizi and Rinvoq, presumably?
Absolutely. Skyrizi is projected at $16.5 billion, and Rinvoq expected to hit $8.2 billion. Huge numbers.
Now, what about Humira? That's the one facing the biosimilar competition. For listeners, biosimilars are basically near copies of biologic drugs, usually cheaper.
Right. So U.S. Humira sales, they're projected to decline pretty significantly, down to about $3.5 billion for the year.
That's quite a drop.
It is. It reflects that increasing competition from the biosimilars taking hold. But looking longer term, ABV is still projecting high single-digit compound annual growth for their total revenue right through 2029.
Driven by?
Immunology, oncology, and neuroscience. But it's worth noting that forecast doesn't currently include any potential impact from, say, tariffs. That's still an unknown.
Okay. A potential risk factor there. And what about the immediate next quarter, Q2?
For Q2 2025, they're projecting adjusted EPS between $3.26 and $3.30, with revenues around the $15 billion mark.
Okay. Let's dive a bit deeper then into the actual Q1 performance. Those headline numbers sound good, but what were the specifics?
Sure. So Q1 net revenues were $13.3 billion. That's up 9.8% operationally. And it beat what analysts expected by a good $550 million.
Solid beat.
Yeah. Immunology was a big engine, $6.2 billion in revenue. And within that, Skyrizi and Rinvoq together brought in $5.1 billion.
That's that 65% jump you mentioned.
That's the one. Meanwhile, Humira, as expected, sales decreased quite a bit, 49.5%, down to $1.1 billion, all due to those biosimilars.
Right.
Elsewhere, oncology hit $1.6 billion. Venclexta showed decent growth, 12.3%. Neuroscience also strong, up 17% to $2.3 billion. That was driven by Vraylar and their migraine drugs.
Okay, so growth across most areas except aesthetics.
Exactly. Aesthetics actually saw a decrease, down 10.2% to $1.1 billion.
Right.
The company pointed towards broader economic headwinds hitting consumer spending there.
Yeah, that makes sense for aesthetics. And the overall profitability.
Looked good. Adjusted EPS for the quarter was $2.46, and they maintained a strong adjusted operating margin of 42.3%.
Okay, thanks. Now, it's always useful to see how this stacks up against, say, the previous quarter, Q4 of 2024. Any notable shifts there?
Yeah, comparing Q1 25 to Q4 24 is interesting. That $13.3 billion revenue in Q1 actually outperformed the estimate for Q4, which was around $14.2 billion, though the operational growth rate did accelerate Q1 over Q4.
So revenue may be a bit lower sequentially than estimated for Q4, but the growth pace picked up.
Seems that way based on the operational growth figures, yeah. And Skyrizi and Rinvoq, their combined sales kept climbing from about $4.8 billion estimated in Q4 up to that $5.1 billion in Q1. Growth rate slightly ticked up too.
Okay.
Now, one point of note, the Q1 reported EPS of $2.46 was actually lower than Q4's $2.79.
Okay. But Q1 beat expectations, right?
Correct. So Q1 beat its own forecast, even if it was lower than the prior quarter's actual result. Sometimes there's seasonality or one-off items affecting quarter-to-quarter comparisons.
Got it. And the guidance increase was more significant this time?
Yes. The full-year guidance raise announced after Q1 was notably larger than the adjustments made after Q4. Suggests growing confidence.
And you mentioned a broader focus now, too.
Yeah, it feels like their strategic messaging broadened a bit this quarter. More explicit talk about obesity and those antibody-drug conjugates alongside the core immunology strength. Maybe a sign of a more aggressive approach to finding future growth drivers.
Okay. So despite the strong quarter and the raised outlook, there are always risks, right? What should people be keeping in mind?
Absolutely. Tariffs are still out there as a potential issue for raw material costs, although ABV's U.S. manufacturing does help buffer that somewhat.
Okay.
The Humira sales decline, while expected, came in pretty steep at almost 50%. That's a real revenue headwind they need to keep offsetting.
And the weakness in aesthetics.
Yeah, that's something to watch.
Yeah.
Is it just a blip, or does it signal broader consumer pullback that could affect that segment more persistently? Plus, you always have policy risks.
Like drug pricing.
Exactly.
Yeah.
Ongoing debates about drug pricing reforms could always impact margins down the line. And then there's just execution risk. You know, integrating acquisitions smoothly, making sure the pipeline delivers, especially in these newer, ambitious areas like obesity.
Right. There's always uncertainty there.
Always.
Okay, so pulling it all together, for investors trying to process this, what's the kind of main story from ABV's Q1 call?
I think the key takeaway is really that ADV is showing it can successfully navigate the shift away from Humira. The growth from Skyrizi and Rinvoq is genuinely impressive.
Yeah, those numbers are big.
They are. So the raised guidance, the proactive pipeline investments in hot areas like obesity and next-gen oncology, it paints a pretty positive picture for future growth potential.
But with caveats.
Definitely.
Yeah.
Investors really need to keep monitoring that Humira erosion rate, any potential fallout from tariffs, and how the aesthetics division performs. And, you know, the broader pharma policy environment is always a background factor.
Got it. Okay, that's a great summary. Now let's shift gears a bit. It's time for our segment where we put on our thinking caps, maybe get a little creative.
The outrageous but plausible section.
Exactly. And we have to stress very clearly, this is absolutely not financial advice. These are just speculative thought experiments based on what we've discussed. Do your own research.
Couldn't agree more. Okay, so with that huge disclaimer, here's an idea for you. ABV is clearly pushing hard into obesity, right? They just did that deal with Nimble Therapeutics, focusing on peptide therapeutics.
Right.
So what if you considered a long position, maybe, in a smaller, really innovative company that specializes in advanced injectable drug delivery systems, particularly for peptides?
Ah, okay. The thinking bait.
Well, if ABV's obesity drugs turn out to be super effective, maybe best in class, but they're peptide-based and need a really slick, convenient, maybe less frequent injection system to truly win.
They might just buy the technology.
Exactly. They might look to acquire a leader in that specific delivery tech niche to lock it down and get an edge. That could mean a big upside for that smaller specials company.
Plausible.
Right.
Even if a long shot.
Outrageous, but plausible. I like it.
Yeah.
Okay, here's another one to chew on. We talked about the potential risk of tariffs on pharmaceutical inputs.
Even though ABV does a lot of manufacturing in the U.S., some components likely still come from global supply chains. So what about looking at a long position in a company that's a purely domestic, U.S.-based supplier of key raw materials for pharma manufacturing?
Hedging against those tariff risks and supply chain disruptions.
Kind of. If tariffs bite, or if global supply chains get snarled again, demand could shift heavily towards reliable domestic suppliers of those essential ingredients.
And that could give them pricing power, boost their business.
Potentially, yeah. Companies like ABV might prioritize securing domestic supply, even if it costs a bit more initially for the sake of stability. So that domestic supplier could benefit. Again, purely speculative.
Interesting angle. Definitely things to think about.
Absolutely. Okay, that wraps up our deep dive into ABV's first quarter 2025 earnings call.
We covered the key financials, management's view, what's happening in the pipeline, and those potential risks.
And again, please remember, those trade ideas are just that, ideas. Purely speculative, not recommendations, not financial advice. Always, always do your own thorough research.
Definitely.
We'd love to hear what you think about ABV's quarter, or if there are other earnings calls you want us to tackle next, let us know.
Yeah, drop us a line.
Thanks for tuning in to Talk Tickers.